Time now for Market Movers as pro traders at CME Group set up for tariffs and the trade war.
Welcome to Market Movers. I'm Jim Urio with Scott Martin.
Hi, Jim.
Okay, so Scott, we're talking about tariffs and tech. Obviously, we're talking about the trade war. So the phase one is supposed to be done. What's the takeaway from that?
Well, the takeaway to me is that the market is finally getting something it expected, Jim, which in a upward sloping market that has a lot of momentum behind it tends to be received pretty well, as we've seen in the last few trading days. However, though, the concern to me is when it finally does get signed, maybe January 15th, does the market say, okay, the news is out, now I'm going to sell off?
Okay, but is that now? I look at it's phase one, and there'll be phase 2 and 3 still hanging out there. Is that enough to keep the Fed worried and keep the Fed dovish?
Yes, and that's the key point, because I believe the Fed is understanding where the markets are, is understanding where, in some degree, these phases of trade are, and therefore, to me, Jim, as long as the Fed stays on message, whatever that message is, which you point out astutely is dovish, I think that's what the markets want to hear.
Okay, now before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. We're looking at the NASDAQ because tech has been disproportionately affected by all the talk in the trade war. Scott?
Yeah, Jim, tech is affected is one way to say it.
Yeah, no doubt.
On fire and fuego is another way to say it, in fact. And rallying on just about anything possible out there these days. I mean, economic data, geopolitical news, too, it seems like it doesn't affect tech. So things in tech land, Jim, especially the NQs, look pretty overbought to me. I mean, just on a chart basis, if you look on a daily or even half-hour basis. So I'm looking at something as an example that may be able to at least bearishly express yourself if you want to hedge out some longs you have. So today is an example, Jim, looking at buying an end-of-month NASDAQ 8800, 8750 put spread for 17 ticks. This trade expires on January 31st, 2020. It risks 340 to make a potential 660 and has some protection in it just in case we get some general pullback, as we probably should get here in January, as say some profit taking finally comes in.
I hate how much I agree with you. I'm still a bull. I agree with you. I like to disagree a little bit. Is that so bad?
No.
It's a perfect way to hedge your risk after you've built up so much. You don't have to sell out of some of your tech stocks. You can put on a trade like this, and if it corrects a little bit, then you're still protected. I like it a lot. I'm still a bull. I'm going the other way, and I'm looking at the micros, the NASDAQ micros, and I think 88.53, it's about there right now, is a spot to stop yourself in with a target of 89.78 and an upside, and a stop place below 87.73. This risks 160 to make 250. I know you're going to say you hate it because you hate the direction, but do you like the parameters?
I like the parameters in the sense that the levels are important in looking at this on the charts to me, because that's about where I was first when I was looking at the put spread I expressed there. Those were some similar levels, at least on the downside of your trade or expression, where I was looking at maybe some areas where the NASDAQ may have some inflection points. So you've nailed those, I believe.
Real quickly, the biggest near-term risk to the market overall, tech maybe specifically, is it just that the trade deal falls apart?
It could be that, or it just could be the fact that things are starting to heat up geopolitically a little bit more than they were, say, in November and December. And that could just give investors some pause as we are at these lofty levels.
Thanks for joining us on Market Movers. I'm Jim Urio, where we are helping to make you a better trader.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.